Hello, and welcome to another update video about Tesla. Yeah, the forecast so far seems to be playing out here. In the last video, only a couple of days ago, I highlighted to you that of this resistance area, obviously this was a potential short trade area here, this resistance level at $278. I highlighted to you that we had a really nice short trade setup, given that we had 5 waves down. Yeah, and what I already labeled as a wave 1 to the downside, and the wave 2 to the upside, which is a corrective wave, which is simply correcting the 5-wave move down. Yeah, this made a lower high. Perfect textbook bearish setup. Worked out, and it now broke the trend line. And we can really start to assume that this C wave to the downside is now running in the wave 2. Okay, so this is all good. And as long as the price is now staying below the last swing high at $274, that's the key level. The focus should be on the downside. Okay, so if that breaks, okay, then you know basically stop out. But this short trade would have generated already some nice profits. Okay, so where are we? We are still here in this situation in which we're tracking a potential 1-2 setup on the Tesla chart. Wave 1 to the upside, wave 2 to the downside. Next support should be, talking about major support, $214. Below that 197 and 176. I would assume we get there. It can always surprise, right? But as long as we now stay below this last swing high, this is the roadmap that it should follow in 5 waves down in a wave C. If we break below $176, then the yellow wave count will become, primary scenario, you could say, where we're coming down in a deeper wave 2, possibly all the way down to $128. So this chart really will go bearish only below $128 because there are 2 wave counts that give it, let's say, a bullish scenario. We have a 1-2-1-2 setup here. Yeah, from this orange support area in the white wave count, we could see a 3rd wave rally. But again, as you know, my primary scenario is that we will test that orange support area once more. And but we already touched it once. Okay, we already touched it, so I cannot rule out that in an alternative wave count we're already going. This long trade setup worked out the same way that this short trade setup worked out, but we now need to see if it still comes down. If it comes down into the orange box again, it will be a very, very nice, very favorable reward to risk ratio for a long trade in a 3rd wave rally. But we will need to look at bottoming structures down here. Now, okay, and all right, look, if we break below $176, then I consider this as an ABC structure, but as a wave 1, yeah, in an ending diagonal, then we are now in the wave 2, which can pull back a little bit lower. Yeah, not in 5 waves, sorry. It would just also be a probably more pronounced C wave then, yeah? So why ending diagonal? Because we are basically in a 5th wave to the upside here, yeah? Received a question from someone who might have been a bit confused, saying that we are in a wave 4 or something. So I think that I can't remember. The comment was just about it doesn't make sense because everybody else is counting this as a wave 4. I don't understand the question. You can put that into the comments again in more detail, but there is no wave 4 here. The wave 4 finished here. That was the January low. And we basically have since then a first impulse to the upside and a correction down. That's a 1-2 setup. And we have another impulse, and we're now likely in this correction. So it's a 1-2-1-2 setup, or A, B, C, in which the A wave was an impulse and the C wave. And we're now coming back down in a larger correction of a wave 2 in the yellow wave count. But there is no wave 4. There's no way you can count that as a wave 4. If you see anyone who's counting this as 1, 2, 3, 4, they haven't done their work with Fibonacci levels, because this is too short for a 3rd wave. And it will likely, when it comes back, it already cut into the wave 1 price range. So you can't even have this as a wave 4. But you can always let me know if you, I don't know, if you meant something different. What is, of course, possible in a bearish scenario, but we don't need to bother about that until the price breaks below $128, because that would be bearish. Yeah, then we will reset the wave 4 lower, this larger wave 4. Then this would have been a more pronounced corrective pattern. But there is no need to waste any brain cells on that until the price breaks below $128, because yeah, we are above bullish support and we rallied into impulses. So focusing on a bearish scenario now without evidence, from my point of view, doesn't make sense. We expect lower anyway, and then we just need to watch for the bottoming structures in the relevant Fibonacci areas. Yeah, if they don't show up, then we will likely reset to below $100, right? But that's nothing that at the moment is in my focus. It could also form, and that's sort of not Elliott Wave, but it could form here an inverse head and shoulders pattern. So we might now be forming that right shoulder in this wave too, and then break higher. So I am bullish on Tesla, but short term, we should pull back a little more, okay? But I will have to change my view. I have to change my perspective if the price breaks above this $273 level that I mentioned. There's always a key level. We need to know what the key level is to make sure that we understand that we are, or to make sure that we are on the right side of the trade. Yeah, that's my update about Tesla. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.